the financial crisis that we're going through at the moment. It is for the French presidency a new challenge, and I think a major one. Undoubtedly one that we will not be able to solve during the 2 or 3 months that are left to us, because I think we're going into what is going to be a long-term difficulty. Not only looking at the financial crisis itself, but at all the implication it may have on our economic activities all over our countries. You know, there was this great hope at one moment at the beginning of the year that Europeans could manage to get themselves out of this idea that we could decouple our financial activities and our economic activities from America. In the global economy today, this is not very realistic, and what has happened since then has shown that this prospect was not very realistic. To make this a short story of this very long turmoil I think we are starting to discover, I think what the Europeans are trying to say as they try to unite their position and to go ahead is, first of all, that there is certainly between the two sides of the Atlantic in this transatlantic relationship a real need for exchange of information and for getting each other well informed about what he's doing and, of course, what is happening in its banking sector, in its financial sector in general. To discover one morning that you have decided to bail out one bank and then the next day not to bail out another one, it's not easy for the other side, the Europeans, to manage their own situation if they are not aware of really what's going on and what are the intentions of the American authorities. And what the French presidency has said in the recent days is that, first of all, let's try to get each other well informed about what we're doing. And the second idea is, let's try to see how maybe we could coordinate our actions, whether it be in the financial sector or with regard to the economic activity that is at the moment dropping in most of our European countries, and I think maybe also in yours. Let's try to coordinate. Does that mean that we must go as far as trying to adopt common regulations? No, let's at least coordinate what we try to do on each side, leaving it for the national authorities to decide afterwards. That's what we intend to do in Europe when it is still of national competence. You know that in Europe the monetary policy is a single policy that is ruled by the Central European Bank, but that's not the case for economic policy. It's still of national competence. So what we are saying is, let's try to work together so that each country, if it wants to take some action in order to fight against or prevent any disorder in its economic sector, doesn't try to do something that will affect its partner on the other side of the border. Let's try to act properly in the right way with good coordination as much as possible. And thirdly, where we have community competence, let's ask the Commission to try to improve the legislation that we have already and the regulations that we have in terms of surveillance of the banking sector, better control of the standards of ratings, etc., etc. We have asked the European Commission to come up with some new proposals, some new regulation, draft regulation, so that we can look at this as quickly as possible. I've been very long and I apologize. I try to give you as broad picture as possible of where we are at the moment, but I'm quite ready to answer your question and to tell you all the truth about the French presidency as it goes on. It's a very lively presidency, I must say. Who could have expected a few months ago that we would have Georgia, the Wall Street crisis, even the Irish referendum? But there it is, and that's the work of each presidency, to accept the facts and the challenges it's facing, whether they come as a surprise or whether they were forecast. That's the interesting part, I would say, of a European presidency. As you know, we have a single monetary policy and therefore criteria that each country has to abide by for the balance of our budget. The deficit of a budget in a country that participates in the single currency cannot be above 3% of the GDP. Now, if you're going through a major financial crisis that you have to bail out, and then that crisis starts to have consequences and implications on the economic growth, and that you see your economic growth and your forecast for an economic growth dropping radically. This is what's happening in France. We were expecting a growth of, let's say, 1.7%, and we based our whole budget on that assumption. We are now hoping for something that would be around 1%, and to be honest, we expect that it will be less than that. That means that you will have less financial resources, less money there, and therefore you will come near the ceiling of 3%, and therefore this is something that derails all your budgetary policy, because you have that constraint and you have to abide by it. So even if we allow for some flexibility, and that was one of the decisions, or at least one of the proposals that were decided at the summit that took place last Saturday, asking the Commission to be a little bit more flexible when it looks at the way we respect this 3% ceiling, it's still going to be difficult, and very difficult. And the same thing is true about every kind of policy France is trying at the moment to pursue, education, health, etc., etc. If you don't have the financial resources for that, the fiscal resources for that, we're all going to be in trouble, and we all have to look at the way we can get out of this. So there is no doubt that this financial crisis will have major repercussions on all our policy. Furthermore, if you have, and you can imagine very easily the consequences of all that, if you have less economic growth, that will mean less trade. For countries like the United States, France, and other countries, where the importance of trade is very strong in their national domestic product, something quite often around 30% or more, this will have consequences also in your economic activity. And lastly, of course, the turmoil on the financial market and the credit crunch that will come out of this will have a tremendous impact on activity also. So what we fear altogether from what is happening at the moment is maybe let's not talk about recession yet, but let's talk about a great drop in economic growth, and that could stay on for a while, and therefore this will force us to look again at all the priorities we had in the different policies that our government have tried to push forward.